trading under pressure. It's up on your screen at about 364 or so, down about 1.8%. Mr. Arun K Chittilappilly, Managing Director of the company, is now joining us right now to take us through what he made in the numbers. So thank you very much. Good morning. Could you break down the kind of volume footfalls that you saw in the quarter, and just the pricing aspect as well?
So in terms of pricing, we have not made any pricing. This is the last quarter of the year, so we continue with whatever pricing we had done. In terms of footfall, we had good footfall in Hyderabad and Kochi. Bangalore kind of underperformed, so Cochin was above what we had expected. In terms of Bangalore, we were down about 12%, so that is a big dampener for us. But in terms of overall footfall, we are still grown by about 25%. So it's in terms of top line growth, we are pretty happy. The issue has happened is mostly in the bottom line, and it's mostly due to statutory provisions that we have made, which I have explained earlier as well. So this will continue for this FY17, and FY18 onwards, I think our numbers will improve.
Why was Bangalore down 12%?
So Bangalore footfalls are down because it's mostly to do with the exam season, so that keeps fluctuating. But
there would be a seasonality factor. The seasonality factor would be factored in, right, year on year? Was there anything above and beyond that?
But then every year it's different. No, there's nothing above and beyond that. I think every year what usually happens is, depending on how the holiday season starts, you either get a bit of the holidays into the March quarter or you don't. But this year we didn't get it. So that is one of the reasons for Bangalore especially. But Hyderabad and Cochin didn't have that issue. I think it's because the delayed onset of exams in Karnataka and stuff like that. So that's usually what happens. So that it usually there is a 15 to 20 day unpredictability in terms of the season start. Sometimes it starts early, sometimes it doesn't start. So
fair enough. Just a quick question, follow up. Hyderabad in particular, I think you had guided for around 7 lakh footfalls in FY17. It was around 4.5 lakh odd as of 9 months. What have you done for the entire fiscal? Have you surpassed? Have you met your guidance?
We are at about 6.3 lakh visitors for the whole year. It's lower than our prediction of 7 lakh. But that's mostly happened because of Q2. Our Q2 in Hyderabad was very poor, and that's the reason why. But in Q1, Q2, Q3 and Q4 have done well for us.
This quarter, April to June should be the biggest for you, right?
April to June is our biggest quarter, yes.
And how are things so far?
Things are looking good, especially for Hyderabad and Bangalore, and even Cochin is showing some growth for us after a long time. Cochin has been underperforming for the last 2 years or so, so it has been a bit of a worry for us. What we have done is we have increased our offerings quite a bit in terms of ride investment. We are planning again a slew of investments. We are opening a new roller coaster in Cochin and things like that. So I think Cochin is showing an uptick, and we hope to maintain that momentum.
Okay. What were your
spend, which is the non-ticket spend?
The non-ticket spends has grown it's grown higher than what we expected. We have grown at around 28%, which is again we were expecting it because we had changed our offerings in our F&B and merchandising. So that has resulted us in a higher proportion of non-ticket revenues. We hope that trend to continue. One of the reasons is that we are also enforcing a dress code in our water park starting from January, and that has also increased sales of our costumes and things like that. But we've done it more to kind of improve the water quality and hygiene standards of the park, because that is a constant issue for us, and it's something that we've been grappling with for a couple of years, and so now we've decided to do enforce a dress code, and that's part of the reason.
Okay, just a quick last question. All of the land that you have in terms of these particular parks, you do have a large land parcel. So anything above and beyond which you would look at in terms of maybe utilizing or monetizing?
No, we are not planning to monetize our properties, because they were historically bought at a very low price, and now as we are expanding our parks, it will come in handy, and at a later point, if we have to actually go ahead and buy, the pricing is very different today, and so that is definitely not something that we are looking to do, and this I've clarified earlier also.
Okay.
This year for us looking a bit challenging because of GST, I think, and we hope that we can still grow our top line by about 20 to 25%, and which is what we are projecting.
So the rate for you goes up under GST?
Yeah, for us, for the amusement park sectors has been put under the highest GST, which is 28%, which is quite unfortunate if you ask me, because it's a very high capex industry, and I think high GST rate will definitely hamper the growth of the industry in India. So we are making a representation from the amusement park industry to the government, and hopefully we can see some.
What do you pay now? What rate do you pay now?
So we are paying the service tax in our parks, which is and then there is entertainment tax, which is it varies from 2% to 5%.
So the increase is almost
GST makes the whole thing a very different number.
The entire increase is what, 10% or so for you?
Yeah, so we will have an extra impact of about 10%. So either we have to pass it on, or so we are still deliberating on that, because we are still waiting more details on that. But I think it's definitely not a good move, is what we feel, and we hope to make a representation to the government and see if some changes can be made.
Okay, fair enough.
The other worry is that I think, yeah, sorry.
Go ahead.
The other worry I think is that, the other worry for us I think is the established players, the players in the industry are few, and we worry that the unorganized sector will benefit from this, especially a very high taxation rate, because it opens the doors for evasion and things like that, and that's another worry for us. So let's see, I mean, how it pans out.
Mr. Chittilappilly, thank you very much for your